Okay, folks, welcome to 2022. Happy New Year. Great to be here. And we have a lot to go over. We're going to talk about the usual. We'll talk about market valuations, economic data, but we're also going to talk about some trends that we're going to be looking at for 2022. And first, we're going to kick things off with the futures market. And we are up. These are the S&P E-minis. And we are up on the session, a little over a quarter percentage point, nibbling on a third of a percentage point. Did we gap up? It looks like we did. Yep, we did. So let's set up an alert here. Let's see whether or not we get a continuation move up higher. Or do we fade? Looks like we're coming back here a little bit. Let's go over to the, what do we have next? Russell? Russell will do. Russell 2000 up a little over a third of a percentage point. Looking good. And folks, I'm just getting over COVID. So I apologize if I'm a little bit congested and sometimes a little bit brain foggy, but it's dissipating. So if I make a flub of some sort, cut me some slack. All right, let's go to comments. I skipped over comments. I already flubbed. I didn't go to comments. Tom Lowe, Happy New Year to you too, pal. What is your view on Sava? Sava drug closed. BIB lowered its Alzheimer drug price 50%. I couldn't speak that much to the drug per se. We can take a look at the chart of its Biogen, right? Take a look at the chart of Biogen, and I'll give you my thoughts there. Louis, Happy New Year, my friend. Talon, Happy New Year. Larry, let's be alert to oil and gas. Demand is high. Yeah, I think that one of the key stories, and we're going to talk about this a little bit more in a little while, is energy prices are going higher, food prices are going higher. Those are the trends that we're going to see continue into 2022. A lot of people are thinking that because the Fed's tapering, that's gonna stop inflation. The fact that they're still buying back debt or buying debt, that means that they're throwing fuel on the fire. So if they buy $1 worth of treasuries, $1 worth of mortgage-backed securities, they continue to throw gasoline on a fire, which is roaring right now. So yeah, Larry, I agree with you. In all probability, we're going to see energy prices go up higher, unfortunately, in 2022, and it's all by design. Eric, thank you. Yeah, I'm feeling better than what I was, but it's like one day you're feeling better, then the next day it's like you relapse. It's really strange. So it does have a grip on you, no doubt about it. But I'll be fine in the next couple of days. My wife just still tested positive today, so my guess is that I am as well. So I'm still quarantining. Falcon, hey brother, how you doing? Happy New Year. Okay, so we already went over the S&P 500. It is up by just shy of a third of a percentage point. Russell 2000 up. It's pulled back a little bit now, but still healthy. Where's my NASDAQ? Did I bring up my NASDAQs? NASDAQs, where are you? NASDAQs. Come on, here we go. NASDAQ up over a third of a percentage point. So equities looking good. We're gonna talk a bit about valuations in a little while, but I'm going to go into a little bit more depth than what I normally do. So stick around because you have something called the skew index, which is kind of screaming Warning, Will Robinson. So we're going to go over that in a moment. Lewis, anything going on with ARNGF? We'll take a look at it. Sorry to hear this disease is affecting too many people. That is why we need CRISPR. Yeah, CRISPR. Yeah. 2022. Good close last week on CRISPR. Yes, down, but a good close. We rallied off the lows. Okay, let's take a look at the U.S. dollar. The dollar getting hammered. Is this right? This is not right. This is wrong. This is wrong. The dollar's technically up versus the close on Friday. This is the Friday close. So this is going to update in a little while. We're technically up. Let's check out gold. Gold. Okay, so gold looking really good. Already new weekly highs here. And gold is going to be one of those investments that we are heavily invested in terms of the gold mining stocks that we are going to be pounding the table on, excuse me, in 2022. And we're going to go to a monthly chart of gold in a moment, so stick around. Have patience. Stick around. We'll laugh. We'll cry. Let's talk about food prices. Wheat pulling back. Soybeans. Soybeans are looking the bomb. Let's go to a weekly chart. We broke out last week. Watch for a pullback and a retest. Soybeans on a retest of this breakout point in green, a buy. Soybeans are going up a lot higher. Don't underestimate the importance of soybeans to our food economy here in the United States. Extremely important. Soybeans go into a lot of products. Corn, which had broken out a few weeks ago. I think this is last week's price action. Bearish reversal bar last week, down on the session. But I think net food prices, they're going up higher in 2022. Shelves will bear today. In the food market, Jeff? Okay. What else do we want to go over? Let's talk about copper. Copper is in fuego, folks. Jeff says, yes, shelves will bear today. And that could be a problem that gets worse. And I'll talk about it more in a moment because we have certain events that are taking place this year. And I'll go into it now. You have coming out this week, what's really going to set the tone for the year. You're going to have the briefs were due at the Supreme Court for the vaccine mandates. They were due on the 30th. So we're expecting some sort of an announcement in the next several days out of the Supreme Court. If they find the administration's mandates legal, I think that for all intents and purposes, the United States is done. We no longer exist. So that's certainly going to set a bullish or bearish tone for the year. As far as what events are taking place in 2022, you have the midterm elections that are coming up, and the midterm elections at current, the Democratic Party, and this is not to get political. All I'm doing is talking fact. They're set for a wipeout. So to avoid that, what might the administration do? One click, two click. Wage and price controls. Wage and price controls. And you may be saying, Nixon did that, Bob. It didn't work. Correct. However, for the first, I think it was the first 60 to 90 days, you saw inflation go from like 6% down to 3%. And then all of a sudden, it just shot through the ceiling. So As we proceed into the midterm elections, don't be surprised to see this administration come out, announce wage and price controls in an effort to at least temporarily pull back on inflation. They can claim a victory on a couple of CPI reports. The problem is this, is that as Jeff just noted, shelves are bare today. What happens when the government gets involved with wage and price controls? Companies can't raise prices. Well, they stop producing. Or they use cheaper materials. And technically, you still have more inflation because you're going to have to replace that product in a quicker amount of time anyway. So it's still inflation, but the government can claim a victory. Beware of wage and price controls this year. Beware. And you're probably going to hear or see gold pull back on that announcement if and when it does occur. I'm predicting that it is going to happen. And if it does happen, watch for a pullback on gold. That is the buying opportunity of a lifetime. Okay. What else do we want to talk about? Let's go to, I want to look at Bitcoin. I'm going to be paying a lot of attention this year to Ethereum as well. Why? Ethereum is going to be a major player in the metaverse rollout. So Ethereum and stocks related to that space, AMD, NVIDIA, VMware, that's from fellow member Franklin who brought that to our attention, and a few other ones was Bitcoin. Again, folks, I'm dealing with a little bit of fog brain here, so bear with me. There we go. Bitcoin screaming out, up over 3.5% on the session. So interesting. All right, let's take a look at economic data coming out this coming week. Unlike last week, this is going to be a busy week, folks, because we have the Pimp Mac Daddy of them all coming out this week. That's non-farm payrolls coming out on Friday. What else comes on that day? Average hourly earnings. CEOs are whining to the administration about having to compete on wages. They never want to compete on wages. They now have to compete on wages. So expect non-farm payrolls, a critical number. Prior to that, as we get every Thursday, we're going to get initial jobless claims, ISM services index, factory orders. Wednesday, the prelude or the precursor to non-farm payrolls, ADP employment report. We're also going to get the FOMC minutes, a market mover. Tuesday, ISM manufacturing index, job quits. This is an interesting number in that basically the report is what it states it is. How many people are quitting their jobs? Are they able to go to another job? Can they quit and go to another job? If this is a big number, watch out for that Friday number on wages because it's probably going to spike up higher. Monday, the marquee manufacturing PMI index and construction spending. So it's going to be a busy week. Buckle up. NyQuil and Jack Daniels got me through COVID. All right. So, all right. I'm with you. I was with Motrin and Glenfiddich, which is a single malt. It was very, very good, and it got me through. And I will say this, I did spend some time outside to get some fresh air, smoking a fine CAO cigar. And I smoked a few of those, to be honest with you. And I'm none the worse for wear after that. So wonderful. We're not allowed to give medical advice here. The however is, I like your style, Talon. All right, let's go to market valuations. As we proceed into the new year, stocks are more expensive this week than last. They remain strongly overvalued. We are 2.2 standard deviations beyond the historical trend line. This is your historical trend line in black. You are here. nosebleed levels. But we've been here for a while. The Schiller PE ratio knocking on the door of 40. We have not been at PE 40 since the dot-com crisis. So remember these numbers, folks. These are real serious numbers. And the problem for traders is this. And I'm not saying we're not making new all-time highs. I think that we are. I just don't think the leaders that got us there last year are going to be the leaders that get us there this year. I think you're going to see jockey switching horses. And if yields proceed up higher, as they gave every indication that they were going to do last week, then watch out for your banks. Watch out for your industrials. Transports, good week last week. Energy, Larry's point, watch energy stocks. Stocks that are high quality growth names in technology. NVIDIA, as I mentioned before. MU, Micron Technology. AMD. Those metaverse stocks, and heck, even Facebook. I took a look at Facebook stock the other day. I'm sorry, Meta. It's looking pretty good. So those names are looking the bomb right now. But the problem for high tech is this. This is the Federal Reserve's balance sheet. Note how it's drifting off. That doesn't mean that they won't step in, bid it back up if the market gets in trouble. Remember, Powell was put on the back burner to make him wait and sweat for his job. He had to go hat in hand to Biden to say, okay, here's what I'm going to do. Promise you, I'm going to get you through the midterms. Whatever it's going to be, he played ball with the administration to keep his job. Because what's his name? Lyle Brainerd would have been the substitute, far more dovish than Powell. So he would have been out. So Powell's still in, and he's walking a very, very fine line. And how he threads this needle, I have no idea. I don't think he does it. Here's a visualization of how expensive the S&P 500 is relative to the overall stock market. Case in point, S&P 500 PE 20 or higher equals highly overvalued. That's right here. Or magnified, that's right here. You are here. It's bananas how far extended we are, how overvalued we are. But at the end of last year, what did we do last month? Well, we took out the lows of the prior month. But what did we do? We rallied back to close near the highs of the month. We put in new all-time highs. So I could sit here all day long and say, listen, the evaluation is this, the Buffett indicator that, Schiller PE ratio this, doesn't matter. Sentiment is still bullish. Now, one of my trends for this coming year is that I think we're going to see a lot more volatility. And that's great for us because in April of this year, we made a big tactical decision, and that was to really change strategy quite a bit. And it was to continue to swing trade, but not with big bets. We got away from big bets to avoid a black swan event. What we did do in turn is we began selling a lot of premium. What does that mean? I meant to put this in the video description area. You can watch this later on. I finally did a tutorial on it. I'll share that with you. You can read that, view it at your leisure. We began selling a lot of options, not buying options, selling options. And in fact, here is our performance. This is right off of Schwab. I think it's crude to show dollar amounts. Well, I actually should show you dollar amounts. Well, we were up like Yeah, so I'll show it to you anyway. 97% on a 3-month basis. So we did very, very well. So that strategy, we plan on continuing moving into 2022, and there's no reason not to do it. By selling premium deep out of the money, it puts you market neutral, and it allows you to take an approach to the market that is not how you say, what's the word? You're not all that committed to it. You're not putting your nickel down and you have a 50-50 bet. Hey, Patrick, Happy New Year to you, my friend. Yeah, you're not putting down a nickel and you have a 50-50 bet that the stock is going to go up or go down. What you're doing is you're selling premium, you're generating cash flow, you're letting time decay work for you. So with that, we plan on continuing that in 2022. Now, moving on to what concerns me about the market is the skew index. Now, the skew index, I'll read this off to you. What is the skew index? This is off of Investopedia. The skew index is a measure of potential risk in the financial markets. Much like the VIX index, the skew index can be a proxy for investor sentiment and volatility. The skew index measures perceived tail risk. So this is your options traders looking to put on protection on the market for perceived tail risk events. The tail risk is change in price of the S&P 500 or a stock that would place it on either of the tail ends or the far edges of the normal distribution curve. These changes typically have low probability. Understanding the skew here. Skew values generally range from 100 to 150. Okay, so there's a range we can work with. The number that I usually work with is 135. I got that from John Carter, major options trader. I learned a lot from him. 135, a number above that. You got to start worrying about events, whether it be black swan events or simple corrections. It's as simple as that. 150 is in the high end. Okay, so now that we have a feel for what the skew is and what the range is between 100 and 150, with 100 being about the average, skew at current is at 154. We were higher back here in June. And you can see that we had a brief correction in the stock market. The skew came in. Now the skew is on the rise yet again. So what this illustrates to us is that at some point in time in the fairly near future, we're going to get some sort of a correction in the market. It could be next week. It could be next month for all I know. It could be 5%. It could be 20%. I don't know. All I'm trying to imply here or show you is that the skew index is saying, be careful out there. Don't get too big to the long side. It's dangerous. Franklin, Happy New Year, my friend. And as you proceed into the new trading year, you got to go over to TrendSpider. 50% off, folks. Use the link below. 50% off and get their awesome trading software. I'll be using it in the next few minutes. Automate your grunt work, speed up your technical analysis using automated technical analysis as well as using seasonality. And seasonality as we proceed into the coming weeks. The first week is usually up 64% of the time. This is the S&P 500. The second week up 70%. By that third week, that's when you got to start worrying. So I'm not going to be putting on any big bets for the next couple of weeks. We will sell options. We will probably add to some of our short-term swing trades that we like. PayPal, CRISPR, if they behave well. If they don't, well, we'll book profits and we'll head to the sidelines. What else do we want to go over here? All right, so another trend for 2022. Inflation. This is the Pring's inflation index. This should be on a monthly view. Folks, this is a major breakout last month, right? So this is no joke. So after seeing the Pring's inflation index pull back, we really began to launch in the month of December. But what else launched in the month of December? Take a look at gold. Take a look at gold, folks. Higher lows. Here's the monthly chart of gold. We have a breakout on gold. Monthly breakout, a big, big move higher on the price of gold. So I think that in 2022, you're going to see food prices move up higher. Here's the DBA, the Invesco Agriculture Fund monthly chart. Good month last month. I think it's going up higher. Energy prices. Oil took a breather in November, bounced back in December. Oil prices going up higher. Natural gas got hammered. I think this is a buy. I think it's time to start looking at natural gas again. Weekly chart. And there's another area where we're going to be looking to invest in 2022. Weekly chart. I'm going to leave it off with this. Weekly chart. Doji star formation last week. I'm not loving the setup here, but we may have seen a bottom on natural gas, and we're going to be looking to probably sell puts, naked puts on Boyle. That's actually a bullish trade. So when you hear the selling of naked puts, that's a bullish trade, not a bearish trade. Here's Boyle. So we're liking natural gas. Big correction. Now it's time to revisit. Look at how high this got. 97. Now it's just off of 25. Bananas. So volatile. What's the other area that we're going to be looking at? You got to look at emerging markets, folks. I'm not saying that they're a screaming buy, but there are certain sectors or certain events that are unfolding at current that are making emerging markets look very attractive. The only thing I don't like is this. This has got to get resolved. Stokes down below 50, I don't like. So we're going to be looking for a breakout here on emerging markets. So what's the catalyst to send emerging markets up higher? Look no further than the US dollar. US dollar may have topped out. And in the month of December, we put in a bearish key reversal bar. Now, it's certainly not broken. The trend remains higher. But we'll be watching for a break of these support levels on the dollar. And if we get it, you should expect to see gold, silver, the miners ripping through the ceiling. You should expect to see emerging markets ripping through the ceiling. Why emerging markets? A declining US dollar is like a tax cut for emerging markets because their debt is denominated in US dollars. So they go out into the markets with their horrible currency and they could buy more dollars with their horrible currency to pay back their debts. Plus, with the weaker US dollars, those emerging markets that are commodity producers, well, their commodity prices are priced in dollars and they're going up higher. It's a great scenario for emerging markets. So that's why we like it going into 2022. What else do we have? I think that's it. Let's do some chart requests. Randy, liking gold too. Long position here. Good for you, man. Patrick, my electric bill through the roof this month. I can imagine. Jeff, please take a look at ticker ACI. Stoke Momentum Index turned higher and stock is basing. Food markets that are big into pharmacy, Vaxo, distro, and fuel. Okay, we'll take a look at it. All right, let's do some chart requests. Tom, I like LABU. Yeah, I think that it had a volatile week last week, but it's firming up. I think you hit the bottom on LABU. Let's bring it up. I wouldn't go running in here, but I think you're near a bottom. I would want to make sure that what we're looking at here, this is a weekly chart of LABU, is that we have a higher low. The way I would trade it, I would sell naked puts. I would sell puts down at the 30 strike around there. Let's go to a daily chart. Yeah, be careful here on LABU. We broke support levels on Friday. This is the automated trend line. Note, bam, we broke support. So just be careful with LABU. We may see lower lows. But support is right down at that 30 level. All right. I have a bunch of members' requests to get to. GWSO. I don't know this company. Note this is the value of the automated trend lines, folks. Here's your upper band of resistance. I did not want this. Holy, what are you doing? Note the upper band of resistance. You're in a triangle formation monthly time frame. RSI is very overbought. You're at 90 on RSI. Very overbought. Weekly chart. Wow, what a week last week, huh? So we were very frothy. We pulled back, retested what was resistance, was now support. Good price action. But you got resistance up here. I don't like the monthly RSI. So overbought. Daily chart. Be careful. You had a reversal bar on Friday. You may get a pullback here. I think that I think it's had its run, to be honest with you. Going back to the monthly chart, we're very overbought on RSI. I cannot condone buying the stock. I'm not saying that it can't move up higher. It just may, just to humiliate me, and that's fine. But from a risk reward perspective, I can't go buying a monthly stock for any length of time that's got RSI 90 on it. So I would avoid these shares. HIBB. Monthly view. For the most part, we're in like a trading range here. A lot of backing and filling. Weekly view. I don't see the reason why you would want to buy it. You know, a trade off of support, okay, but you got to use a tight stop. Where are my Stokes? Where are my Stokes? Yeah, Stokes is declining. I don't see a swing trade here. If you're going to buy it as an investment, that's fine. But I would use this tight stop right at around 69 bucks a share. You break down below that point, you got to get out. Daily chart. Daily chart's looking better. I like the daily chart. Maybe you do have some room to run here. Stokes are rising. RSI is still down below 50. I'd like to see that change. We broke out on the 29th, retested on the 30th, retested yet again on the 31st. Looks like we're probably going to pop up higher here. Looks like a short-term swing trade, and I would exit on any rally. Looks like we're probably going to head up to around 78 bucks a share. If we do get a rally, and at that point, I would be out. Apple. See how we closed out the month. A pretty goddamn good month for Apple. I think Apple's going up higher. Weekly view. Just keep in mind that we have resistance up here. This is the value of the automated trend lines. Take them off. Just beware. Resistance above on Apple. Stokes still look good. Daily chart. Daily chart showing a little bit of topping action where? Right at automated resistance. Watch for a breakout above 81.12 per share, and then you can look to buy the stock. But right now you're seeing topping action at resistance, so I would not go initiating a new trade. And beware, you have your Stokes putting in lower high. So short term, a little bit of topping action. That monthly chart, though, looks pretty goddamn good. Longer term. So now it's just a matter of where you want to initiate your trade. If you want another support level, look at down here. 172 per share. Very interesting support level to buy at. Let's check seasonality. Let's go to a monthly view. January is not a great month. Only up 50% of the times. What else do we have? VZ. Verizon. Yielder. Bad. Made some money on XTND out last week, 495. Was just luck. Good for you, man. Let's see what else we got. All right, so monthly chart Verizon. Verizon broke support in November. We rallied back last month in an effort to recapture support, as noted by the automated trend lines. That is now acting as resistance. Let's take a look at a weekly view. You have a lot of resistance above. We broke out here. I think you could pull back and do a retest of this breakout point. I would like an entry point at around 51 bucks a share. That's where I would like it. I would create an alert down there, keep a little bit of sensitivity, touch, bounce. I may be involved with this one. Keep that alive for a while. Good. I wouldn't buy it in here. Too much resistance. I think we're going to retrace. I think the weekly chart looks good. We broke out the week of the 18th. No follow through yet. We're probably going to pull back, retest, and then we'll look and see whether or not we get a follow through to the upside. Daily chart. I don't see a compelling reason to go buying right now. Stokes are rolling over as well. So I would avoid it right now. Watch for that support level to get hit. That's your entry point. Hey, Bo, Happy New Year to you, my friend. Okay, what else we got? AMD. AMD, no new monthly high last month. A little bit of a stalling action that went on. Again, folks, my nose is starting to really clog up, so I apologize if I'm muffled at all. I don't see a compelling reason to go chasing AMD. I love the company, love it, but no compelling reason right now to go buying it. Bearish reversal bar on the week. Well, get Vicks nasal spray it next time you go out. All right, I will. I just got it. Hey, Paul. I haven't looked at CRISPR yet. No. Falcon. Oh, Falcon watching out. Good looking out. Folks, if you could smash that like button, I'd really appreciate it. Thank you very much. It helps me out quite a bit with the YouTube algorithm. Thank you. Thank you, Falcon. Lewis Marcus, deal with Xilinx was pushed off December to January with AMD. Okay. Oh my God. Bonnie Bean, how you been? Long time. Happy New Year to you too. Okay. What else do we have? Daily chart, not much going on here. We had 1, 2, 3, 4 sequential down days. Definite resistance up here is noted by these topping tails. I like it down here. See if we can get a retest of the breakout point. Okay. And we're good. Seasonality for not great. These next 2 months are not wonderful for AMD. So just beware. What else do we have? Did I do ACI? ACI? Albertsons. Bad month last month. This is a bearish engulfing bar. Very bearish. Be careful here. Your Stokes are declining down below the 50 mark on a weekly time frame. Stock is hanging on by a very thin thread. It's a coin toss where it goes. But that monthly bearish reversal bar, very negative. And here's your resistance level. I would avoid this right now. Check out seasonality. Only 2 years worth of data? Is that right? Yeah, that's right. All right, so this is worthless. All right, what else do we have? CRSP. We're long for CRSP for disclosure purposes. CRSP was an earnings trade for us. We traded options. We did well with it. Watch for a support level to get hit. We are now owners. I wouldn't buy it here. I wouldn't add more here. I want to buy more on strength. I want to get I want to get the market's validation that my decision to purchase back here is right. So how is that validated? It's validated by going up higher. So I'd like to see a breakout above 88.50 per share, and then I would look to go adding more to the trade. Not until then. Daily view, bearish reversal bar on Friday. No reason to go buying more here right now. You got to wait for the breakout. Right up here. You have a potential for a nice W formation, which I like. Here's your higher low. Now what you need is a breakout. And that's what we're waiting for. So no rush. If you're not currently long, you want to scratch the itch, buy a few shares, okay. Then add more and break out above like 84 bucks a share. Watch out for these Stokes. They're rolling over. That's not good. What else do we have? What's time? 12 minutes. Randy K-Web. This is China related. Automatically it gets a sell. You got to avoid this. Anything China is not investable. This is broken. This is a broken stock or a trust, whatever it is. I would avoid it like the plague. I'll leave it at that. Just stay away. Stay away. If you're investing in these names, these Chinese stocks, you have the senior partner, which is the CCP, and they do not play fair. So avoid anything China related. Pat, what is this? I hear from Art that Tesla had some hot numbers. Yeah, there was I think it was 302,000 new auto sales. I don't know if it's for the quarter or for the month. But yeah, there was definitely good news that came out. All right. ARNGF. That's a big one. ARNGF. Argonaut Gold. Let's go to a monthly view. You got to be careful with these smaller mining companies. If you're going to invest in mining stocks, I would just go with the funds. It's safer. This is a very specialized field. And on the month where you had the gold stocks up, you had gold up. This stock had a bearish reversal bar and broke support. So you got to avoid it. This is not a quality stock. So I would avoid this like the plague. Take note. I'm going to take the automated trend lines off, throw them back on. Look at that break. Horrible, horrible, horrible price action. Weekly chart. We're able to bounce back some last week, but there are other players out there that are far better. And again, I would stick with ETFs. Daily chart. Showing a bit of a comeback here. Why it sold off like that is a major concern that I would need an answer to before I got my investment dollar. What else? Oh, BIBB. BIIB. IIB. Biogen. I always do that. All right, so on the month, not a lot happening here. They tried to rally it. It hit resistance. It faded. Stokes is still declining, so momentum continues to weaken up here on Biogen. I will say this. Seasonality is very favorable in January, not so much in February. So if you get a ruthless sell-off here, maybe down to support early on in the month, maybe you want to step in by the dip. We'll do a deeper dive in a moment. Weekly view. Yeah, they're struggling here. So, your stochastics they're looking good. I really like these weekly Stokes, but your monthly Stokes still have some damage to wreak on the stock. So, as I always like to say, when you have Stokes trading down below 50, rallies tend to fade. And that's exactly what happened last week. We rallied and it faded. Volume was good. Daily chart. All right, interesting in that we're putting in a higher low. We broke out. Take a look at these Stokes rolling over already. No rush here whatsoever to get involved with this stock. What else do we got? All right, I think that's it. Will Amazon run up or keep sinking? Interesting question. It's not a bad chart. I mean, it's consolidating. The month wasn't great, but it held support and volume was light. Stokes are hooking up. That's bullish. No, there's no rush to get involved here. This is a good one where you wanted to sell premium on, sell a strangle, sell a deep out of the money call option way up here, sell a deep out of the money put option way down here, collect premium. Nothing going on here. You could buy the stock, but it could just sit and go back and forth for the next year. So, to me, this is an options trade, and it's a safe one. It's a safe one because the stock is just simply trading sideways. John Smith, MA, Ma. All right. Um, so bear with me one second. I'm getting my thoughts together here. So we broke down back here in August. We are now beginning to consolidate. December, a very strong month, but we didn't break out. Weekly chart. That's on a monthly time frame. But on a weekly time frame, we broke out 2 weeks ago. Continuation move up higher last week. I think we're pulling back. I like it on a retest of this breakout point. A little bit of sensitivity, touch, bounce. Note how it was stopped at resistance. Again, the automated trend lines. Take them off, put them on. Very powerful. Let's take a look at seasonality. January is not a great month. That changes in February. Daily chart. It's struggling. I think you could pull back further here. Stokes are overbought. Watch this support level down here where I drew that, put that alert up. I would look to get in on a weekly retest of support. What was resistance should now act as support. Patience, allow it to come to you. M. McNeil, Square. Aren't they changing their name, Square? Oh, yeah, Block, yeah. They got blocked over the head. Monthly Stokes are weak and getting weaker. We held support last week, but a down week. Stokes are oversold on a weekly time frame. But those monthly Stokes are losing momentum. So these could stay oversold for a while. Or they could rally and then roll over and put in a lower high. Daily Stokes looking good here. But again, those monthly Stokes are going to influence the weekly and daily Stokes. So it's good that we're seeing a higher low. It's good that we're holding support. I would look for a breakout. Watch for a rally up to this resistance level here at around 184, and then get out. So you may get a short-term short squeeze on this one. Any rally, I would exit and move to the sidelines because this would haunt me. These Stokes are declining. You don't want to be involved longer term with Stokes weakening on a monthly time frame and moving lower. Momentum is waning. I think somebody asked for Ford Falcon. Ford Falcon, huh? Uh, would I short the rally? No, my conviction would not be that high on Square to short that rally. So no, I wouldn't. I would not short that rally. Um, as it stands right now, if I see market conditions weaken up and that stock rallied up into resistance, I would entertain it. If the rest of the market looked weak as well, and it looked like the best short out there, but from this point right here, right now, would I say definitely short it on a rally? No, not yet. I would revisit it though. Franklin, thanks, Bob. Always had a great insight. Thank you. Thank you. Without you, I couldn't speak to anybody. Our train. Amazon tends to gap up before earnings. Amazon, MSTR, Google will shoot up by at least $200. MicroStrategy. And we'll be looking to trade those earnings. No doubt about it. All right, let's do Ford, and I'm going to wrap it up because I'm losing my voice. Ford looking good here. Good volume last month, closed slightly off the highs of the month. Let's stick with this. Let's go to the weekly chart. You have resistance up here. So it's flirting with it. I would not initiate a new trade. Stokes are overbought. Weekly volume is declining, but let's put that into context. Holiday weeks. So let's give it a pass on weekly volume. And I want to point this out. Seasonality for the month of January, very poor. So you may get a correction here. But I think longer term, it's probably going to go up higher. I mean, the monthly chart looks very, very good. Even the daily chart, the Stokes look okay. As long as they don't roll over and put in a lower high. You got resistance up here, that's for sure. On a daily time frame. This is a tough one. Monthly chart looks good. Volume was good. Weekly chart, it could go higher. Not bad. It's a buy on a rally up and above 21.10 per share. It's got a close there. I would put on a long trade, add to it on a rally and a close above 21.50. RSI looking good. Stokes looking good. You got to get a breakout. You got to have that breakout. And on that breakout, buy it. I can't tell you what to do. No financial advice. Entertainment purposes only. But I would entertain buying it. With that, folks, please smash that like button, subscribe button, whatnot. Thank you for being here. It is my honor. Thank you for spending some time. And I'll talk to you throughout the week. We should be back on a normal schedule of live streams. It looks as though I made it through tonight okay. So we should be back on track for Thursday night stock charts live. I couldn't do it last Thursday, too sick. But I plan on getting back on track. Falcon, thank you, Bob. You're very welcome. Happy New Year to you, my friend. And the way the market sold off on the 31st and the FANG action looked bearish for the overall market. All right, so that goes back to what I was saying earlier. I'm not sure when you checked in, but it's a valid point you have. So one of the concerns that we need to entertain as we go into the new year is if the Fed balance sheet does shrink, if it does roll in, if they do raise rates, will the leaders that drove the S&P 500, the FANG stocks, will those leaders continue to be the leaders, or will they now lag? And you have new leadership. Now, if you have the 10-year yield, which looks as though it may want to break out here. What do you want to buy when the 10-year yield breaks out? What could be the leadership group of choice? Energy and banks. That's what you want to look at. With that, folks, everybody have a great night. Lewis, good night, my friend. Thank you for being here. Randy, thank you very much. I appreciate that. Everybody have a great night. I'll talk to you tomorrow. Have a profitable week. Stop losses. Stay small. Be well.